Let's talk about this earnings roundup. It might save the market tomorrow. All right, guys, I'll start with you, Steve. I got to tell you something. We are living up to the hype of 1999. Is that enough to save this market that's obviously in trouble?
Are we going to cue the Prince music party like it's 1999?
I almost wore pumps. I don't know.
I hope not. No, and listen, I'm skeptical on tech here, but I think bears who try to compare this to 99, 2000, that's ridiculous. We're not in that kind of a bubble at all. I think we're frothy, though, yes. By the way, Seattle to the rescue today as far as earnings season goes. The Seattle Seahawks might not have won the Super Bowl, but Seattle companies, Starbucks, Amazon are coming to the rescue of this stock market right now.
Yeah, that's why they can afford a 15-cent minimum wage, but I don't want to get off topic here. Shaw, you've been the skeptic. What are you thinking? Because on one hand, you've been right. Old economy stuff is getting crushed, but this new economy stuff has been amazing.
In the battle between clicks and bricks, the clicks are winning handily, and in terms of Amazon now, it's larger in capitalization than Walmart. So I think you got to.
We got to say that again, real slow. It's Amazon is bigger than Walmart.
Yes,
that's amazing.
A 20% increase in their profits, an 81% increase in their cloud services businesses. It's on fire, and you can't go against it. Tech has been leading the market higher, as have financials. Financials have cooled a little bit. Tech is still leading, and tomorrow morning I think tech is going to take off.
I think Amazon is just tremendous what they've done for so many quarters, for so many years. Charles, you've been talking about how everyone thinks that Amazon spent too much money on all their capital expenditures, and the beauty of Amazon today is all those investments showed and came true to form in the fact that we saw a 20% increase top and bottom.
Although last year Amazon had a rough year, and I think Jeff Bezos finally got the wake-up call. You've got to bring something to the bottom line. Right. You can't indefinitely just build this great company and be valued on all kinds of funny metrics.
And Charles, listen, I'm a fan of Amazon. Talked about it on the show. I think the barriers to entry they've created, it's a castle that is built, the deepest, widest moat imaginable, and I get that. It's not cheap at all. But I caution about getting too excited about tech broadly. Semiconductors, as we talked about, have been a disaster.
Well, let me ask real
Oracle has been a disaster. That's new economy.
What about this old economy stuff? I'm in Boeing. That's one of my only few, one of my old school names that's doing well. But, I mean, is it just over? We had this conversation earlier in the week, Shaw. Your opinion, is it just over for some of these 100-year-old companies?
I think it's over for the time being. Unless the global economy picks up, I think these old line companies are really stuck in the mud. Everybody's leaning into the new economy stuff because that's where the growth is. That's where you want to be. That's where you have to be. If you're chasing yield, you're chasing growth, you're chasing momentum. By the way,
almost all the names that are killing it after the close, all consumer related. So we may not be making more money, but we're spending every nickel seems like we're getting here, Hillary.
Well,
real quick.
Initial jobless claims, they were down today. So the consumer is out there
43-year low in initial jobless claims. All right, guys, thanks a lot.